And we are live. Good evening, everyone. Recently, Chamath made some interesting remarks and had some interesting commentary surrounding greed on Wall Street with stock buybacks and paying out dividends and not really focusing on saving money for a rainy day. Now, this is something that I've been highlighting on this channel for months now. And I don't claim to be a PhD economist or some high level analyst on Wall Street. I'm just a person with common sense. And I can see that the problem is our monetary system and policy because it incentivizes, and that's the key word here, it incentivizes bad behavior. It incentivizes malinvestment. It incentivizes people to go into debt and to overconsume and to splurge for short-term gain and benefit and never to really focus on the long-term effects. As I highlighted time and time again, when you look at these airline stocks and companies, there's no reason why we have a downturn like this and these companies are already knocking at the government's door talking about they're too big to fail. If a company is too big to fail, they are too big to exist. And we need to get back to hard money. There needs to be consequences for running your company inefficiently. And I'm glad that Chamath is highlighting this and really speaking to this, because what good is it to have FU money if you never say FU? And Chamath, being an owner of the Golden State Warriors, being a billionaire, and seeing that this system is fundamentally broken. At its core, this system is fundamentally broken. And we need to get back to a form of hard money. And this is where gold comes into play. And this is where cryptocurrencies come into play, like Bitcoin, because what it does is it constrains you. Because I said this to you guys time and time again. Man and woman, we are flawed people. And if there aren't constraints put in place to stop us from feeding into that temptation, we will print money. We will hit that money printer because it's easy to do so. And by having a constraint where you only can spend money that you actually have, and getting rid of this fiat debt-based system is actually going to be beneficial to the economy at large. So we're going to get into the video with Chamath. As you come into the live stream, please do me a favor and like the video, share the video, subscribe to the channel if you have not done so already, and make sure you hit the notification bell and set it to all so you will be notified every time that I go live. Also, in the description below, there is a link to join my mailing list. Click the link, enter in your name, will be in the description as well. Let's look at the chat and see what's going on. Let's get over here to the video. Let's make sure that this is off. So see what's going on in the chat. Agree. 1, so the audio is good. It's good to see. Okay, so I'm going to play a little bit of the audio, and then I'm going to get into the presentation. Give me 1 second.
Could say a convenient example for you to use. Yes, they've bought back a lot of stock. The stock performance over the last many years has not been good. The business performance hasn't necessarily been good either. I take your point on that. However, I could easily come back to you and say, so what do you say about a company like Apple, Chamath? Are you saying that Tim Cook is not a good steward of that company? They've bought back arguably more stock than anybody else. That was at one point the most valuable company on earth. A lot of people beyond Apple shareholders or Apple employees have been rewarded as a result of that. Every Apple shareholder and people who have stayed with that company for a long period of time have been rewarded. The company still has a hoard of cash that it is sitting on. So what's the difference?
You just proved my point. So let's assume you had a kid, 2 kids. One kid was called IBM and the other kid was called Apple. One kid, every time they made a buck, spent a buck. The other kid saved most of that dollar and every now and then spent 10 or 20 cents. And then all of a sudden something happens and the first kid starts to ask you for help. And the second kid is just sitting around thinking, well, I saved for a rainy day. That is the difference between IBM and Apple. And that is exactly why I think Tim Cook in many ways has done a good job, because he has kept so much cash always available to do a deal. Warren Buffett is another great example. You only do these things when the stock is low, when it's below some sort of intrinsic.
Now, I've been on this channel and I've been saying this time and time again. As he just highlighted, as an individual, as a small business, as a corporation, you should have a savings. We should be incentivizing people to save money. You cannot sit up here and tell me, oh my God, I didn't expect that this was going to happen. People shouldn't be held accountable. Yes, you should. Because as an adult, as an investor, as an entrepreneur, as a CEO, you should have cash in your bank account. You should have cash on the balance sheet to withstand this. Instead, what we've seen since this entire bull market, we've seen nothing but companies doing financial engineering and buying back their stock. And I highlighted this for you guys, and I showed you that by buying back your stock, you are taking supply out of the market, which makes it easy to beat your earnings per share, which makes it easy to push up stock prices, because stocks operate off of supply and demand. Well, if the company buys back its own stock, they are taking supply out of the market, which means if demand remains the same, if not increases, it's easy to push prices higher. I've been screaming this on this channel for so long, and I'm glad to see a billionaire saying this. Now understand, if little old me sitting here, if I know this, you can't tell me that these people who run these Fortune 500 companies don't know this. So now the question is, why are they still doing this? And that goes back to the incentives. We have an economy that incentivizes you to over leverage, to go into debt, and then you become too big to fail. So now I want to highlight something for you, because this is very important. Look at Boeing. Boeing right now is saying they need a bailout in order for them to keep their employees and stay in business. And they're one of the largest manufacturing companies here in the States. And they're saying that if you let us go belly up, you're going to lose a lot of manufacturing. Well, why can they do that? Because they know that the Fed is going to backstop them through quantitative easing, through all of these lending facilities, because it incentivizes bad behavior. Because we don't have free market capitalism. We're not allowing these companies to see that if you lever up your balance sheet 10x, 20x, you don't pay your employees fair wages, you're not investing in CapEx, you're just simply rewarding shareholders and we're paying out record bonuses. So think about this. Here, let's read this for a second. It says fired Boeing CEO. Now remember, this is from last year, this article. It says fired Boeing CEO Muhlenberg will get more than $60 million. Here it is. He ran the company in the ground inefficiently. The Dreamliner was actually crashing and killing people. And he got $60 million to mess up the company, to run the company poorly because of the incentives. Think about it. If I'm a CEO and I know that I'm going to buy back stock, I'm going to get paid bonuses, shareholders are going to be happy, stock prices are going to go up. If a recession happens and I have too much debt, the Fed's going to bail me out. And even if I mess up and I get fired, I'm going to get $60 million. Think about that for a second. I really want you to really sit back and just ask yourself, does that make any sense whatsoever? That you can do that. But you can do that type of stuff. You know why? Because governments can just print money. There's no constraint on the money supply. See, if the Fed and the government were constricted, they only could spend money based upon the gold reserves that they had. And this is why we have to get back to a monetary system that constricts government. So even if they want to spend money, they won't be able to spend money. This is why you need hard money, because man is corrupt and man is flawed. This is ridiculous that these guys can get away with this. But again, it goes back to incentives. Let's read this article a little bit. It says Dennis A. Muhlenberg, who was ousted as Boeing's chief executive last month, this is from January 10th, 2020, as the company contended with the biggest crisis in its history, will depart with more than $60 million, the company said Friday. But the value of the stock and pension awards he is contractually entitled to receive is worth more than $62.2 million, the company said. Mr. Muhlenberg also has stock options that can be worth many millions more. Now think about this. He ran Boeing into the ground, put out a faulty product that killed people, and he was able to leave the company with $60 million. This is what is known as a golden parachute. And this is legal. Legal. And this keeps happening time and time again. Now, right on cue, look what Bank of America put out. Gold to reach $3,000, 50% above its record, Bank of America says. Why is this happening? And I highlighted this for you because they said it right here. The Fed can't print gold. This is why you need hard money, because you cannot print more of it. I spoke about this in the Dave Ramsey video I did the other day. Money is supposed to be just that, money. You have to actually go into the ground and find this. So even if Boeing has lobbyists and they donated to your campaign, guess what? You only can spend the gold that you actually have. So if you don't have it, guess who can't get bailed out? American Airlines can't get bailed out. Boeing can't get bailed out. This is why we need a reset. And not even just companies. Think about consumers. Why does a new car have to come out every year? Why is there a new iPhone every year? Why are all of these consumers in the shape financially that they're in? Because when you live in a debt-based, fiat-based economy, you create this hyper consumer-based economy where all people do is consume, 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 consume. Now, what have I been saying before? U.S. household debt hits a record high, 14.15 trillion, because all people do is consume. No one focuses on saving and producing things. It's all about consumerism. And this is why we need a reset. Same thing with Bitcoin. There will never be more than 21 million Bitcoin. You cannot print more Bitcoin. And Chamath was one of the first investors in Bitcoin. I think he has like more than 5% of the supply. I put up a post on my community tab. That's hard money. It forces you to be responsible and to think before you spend money, and not to have this hyper consumer based economy where you're over leveraging yourself. Now, again, I'm not saying that we're not talking about Apple as far as the slave wages they pay Chinese workers. We're not talking about them shipping jobs overseas. No, we're talking just simply about the balance sheet, about how the company is fiscally handling itself versus IBM. Being responsible, not over leveraging yourself. Now, I'm going to play a little bit more of this and then we're going to come back.
Value. And when the incremental cash is just absolutely not necessary, you don't do it with the primary oxygen that you need to survive. And that's what most of these companies have done. And that's why this whole issue is just one of these things that really upsets people, because when you work inside of a business and you yourself are giving them your entire life, you're giving them your most valuable asset, which is your time, you expect, and you should expect, that the CEO and the board are exercising good judgment And in my opinion, buybacks are the primary example of a growing strain of incompetence amongst CEOs.
He's saying exactly what I've been saying time and time again. How is it that these people, they have master's degrees from Yale and Harvard? They have all of these high-level executives working with them, and they don't realize that they shouldn't be buying back their stock? Of course they know they shouldn't be doing that. Dividends and stock buybacks should go out when the company is healthy financially, not because you're trying to boost earnings per share and game the system. That's not how the system works. And I shared this article with you guys before, but I want to share it again. It says Boeing and the siren call of share buybacks. And let me drop this in the comment section, so in the chat, so that you can go and actually research this. It says one of the oddities of the modern U.S. stock market is its strong predilection for share buybacks. Rather than finding profitable outlets for their cash holdings by investing internally, see, actually taking the profits you have and paying your employees a fair wage, actually taking the profits you have and reinvesting in your employees and giving them new skills to be competitive in the marketplace. No, they take that money and they buy back the stock so that they can get bonuses and go buy jets and go buy penthouse condos and buy sports teams. That's what they do with the money. Instead of rewarding the employees who are generating these profits, they don't do that. The idea of shrinking the number of shares outstanding has acquired its own momentum, and buybacks have become an important driver of the stock market performance. In recent years, members of the S&P 500 have increased their spending on their own stock, last year retiring 4% of the index's capitalization. That is equivalent to $800 billion. Those stock buybacks are not only mature companies whose need for investment might be lower. They include growth stocks, such as tech companies and those with big investment needs, including pharmaceuticals and defense. Indeed, one of the heftier spenders of recent years has been aerospace giant Boeing. It illustrates a choice that many chief executives have willingly made. Willingly did this. No one forced them to do this. They willingly did this to prioritize buybacks over investment. In this, they have received little but encouragement from their financial backers. Share repurchases seem a good bet to investors who are highly focused on short-term share price performance compared with uncertain and longer-term gains from new product development. Buybacks are, after all, the very purest form of financial engineering. What have I been talking to you guys about time and time again? When Trump was sitting up here telling you that this was the greatest stock market of all time, that the economy was doing so well, who was sitting up here telling you, no, it's not? The stock market was not going up because actual investors were taking capital and buying back buying stocks. The stock market was going up because of quantitative easing, because of the Fed going into the repo market, and because of companies buying back their stock. That had nothing to do with employees getting paid fair wages. That had nothing to do with companies actually beating their earnings because they were selling more product. No, they were buying back their own stock. And now we see that the emperor has no clothes. Now, don't forget, it was your president, Donald Trump, your president, who gave the wealthy a $1 trillion tax cut when they didn't need it. It was your president that gave the wealthy a $1 trillion tax cut when they didn't need it. And you know what they did with that $1 trillion tax cut? Remember, it was supposed to create all of these jobs and the economy was supposed to boom. They simply brought back their own stock and paid back bonuses. Right? Now, we're in an economic downturn. Think about this. Now we're in an economic downturn. And now the balance sheet is about to explode to nearly $4 trillion. Think about that. So we could have saved that tax cut for when we really needed it. Nah, we didn't do that. Because trickle-down economics is supposed to work. It didn't work with Reagan, and it's still not working now. This top-down economy, this debt-based economy, this fiat-based debt monetary system doesn't work for 99% of people. It only works for the top 1%, for the people that are the closest to the money printer. And now we're printing trillions of dollars. We're blowing a hole in the deficit. We're already at $24 trillion of national debt. The biggest threat to our national security isn't China. It isn't Huawei. It isn't ZTE chips. It isn't Iran. It isn't the petrodollar. It's our national debt. And I have people coming on my videos telling me, I don't know what I'm talking about. Where's that $4 trillion going to come from? Because remember, the tax cuts were supposed to pay for themselves. This is what your president told you. Your president said the tax cuts were going to pay for themselves because we were going to be so productive and we were going to get China in line with the trade deficit. Well, that all turned out to be a lie. The oil industry is about to go belly up. So that's a ton of manufacturing jobs gone, not coming back. The only way it's going to come back is we're going to have to do what? More deficit spending, which is going to make us unproductive because of our national debt. But you have people saying, oh, well, modern monetary theory is going to solve that. Really? You think the rest of the world is going to sit back and watch you print your way out of your own doing, and they're not going to want to do the same thing? Think about that. Let's get back to the article, though. Unlike special dividends, they don't simply gear the balance sheet. They supply a further twist by reducing the number of shares in issue. The result is to manipulate upwards the earnings per share number, sometimes quite dramatically. In Boeing's case, its effect was to push EPS last year up 20 to 25% against what it would have been without the repurchases since 2013. Who benefits from this optical leverage? See this right here? Who benefits from this optical leverage? This is very key. Not necessarily the shareholders. Buybacks tend to happen when share prices are rising anyway, exposing them to risk of the company destroying economic value by repurchasing overpriced equity. The biggest winners are managers, especially those whose remuneration is tied to stock market measures such as EPS growth. Take Boeing's chief executive, Dennis Muilenburg. Since becoming the boss in 2015, his pay has doubled. Last year, he took home a thumping $30 million in compensation and gains from exercising options. Now, these are the same companies now that are paying out record bonuses. Record bonuses. They're now coming to you, the taxpayer, and saying, hey, we need a bailout. I shared this article with you. Look at American Airlines. Let's zoom in real quick. This is American Airlines, another company that needs a bailout. I shared this with you guys before. Here's the compensation they've done. In 2018, $11.9 million. $12.1 million in 2017, $11 million. But they're telling you that they're stewards of capitalism and they know what they're doing. And we just got to trust the free market. This is not free market capitalism. This is cronyism. This is manipulation, and this is gaming the system. This is what this is. This is getting something for nothing because they are close to the money printer, because they have relationships that you and I don't have. This is unfair. And now I can't compete against these people in the free market and take market share from them because they're too big to fail. So their CEO can buy back stocks, pay out millions of dollars in bonuses, run the company in the ground, hold little to no cash, rack up debt, and the Fed will come in and bail them out. But you and I We got to go through the PPP program. They don't even have a website set up. The SBA is telling us one thing. Our bank is telling us another thing. And we have to go file bankruptcy. But Boeing and American Airlines, they're too big to fail. They're too big to fail. Now, right on cue, because see, this speaks to what I've been saying. This system is so corrupt. Why is Harvard getting $9 million in stimulus money when it has a $40 billion endowment? Think about that. That's $9 million that can go to you and I, small businesses, regular everyday Americans that are struggling right now. You have Harvard, they have a $40 billion endowment, and they're going to get $9 million in stimulus money. Now, because they got backlash for this, you know what they came out and said? Oh, we're going to use the $9 million to give it to some of the students that are struggling in the form of grants. No, you don't use taxpayer money to do that. Use the $40 billion that you have. Use the $40 billion that you have to help your students out. Don't use taxpayer money to do that. But again, it goes back to hard money. It goes back to constraining government, because government is a parasite. And they will leech off the people because they're only thinking about short-term gain. They're thinking about the next election. What can I do to get the most votes so that I can get into office? They're not thinking about, what are going to be the long-term effects. We are leveraging our children's future. Remember, debt is consuming future productivity. See, a lot of people don't understand that. That's what debt does. When you're borrowing money today, what you're saying is, I want to borrow my future productivity, my future gains to consume it today or to invest it today. And no one bats an eye. Because like Ben Bernanke said, it's just ones and zeros on a computer server. So, hey, if JP Morgan needs, $500 billion, we got him. But you and I, we have to fend for ourselves. Think about that. This is a college that has $40 billion in their endowment fund. And they're taking stimulus money. Another company right here. Where's it at? Large public companies and big chains, including Shake Shack and Ruth Chris Steakhouse, have started returning their loans amid criticism that they were taking loans at the expense of smaller firms, gaming the system. Gaming the system. The SBA loans, the PPP program, the EIDL program, that was meant for small businesses that are struggling. You have public companies. That means that when you're a public company, you can tap into the public markets and get funding. That's the whole purpose of going public, right? You're selling equity in your company, an equity stake, to the public markets to raise capital. That's why you go to the capital markets. These are public companies, and you're taking taxpayer money. But they're going to tell you and I that we have to pick ourselves up by the bootstraps. We just have to work a little bit harder. You and I can't get this. As small businesses, we can't get this. We don't have an HR department, an accounting department. We don't have lobbyists that can go down to Washington and get us tax breaks and tax laws. But this is the problem with the system. And this is why you're going to see gold skyrocket because of what's happening in the system. Because this system incentivizes bad behavior. It all goes back to incentives. All of it. And guys, there's 196 of you watching this. It's free to hit that like button, guys. Free to do it. It says, the bank increased its target from $2,000 previously as policymakers across the globe unleashed unleash vast amounts of fiscal and monetary stimulus to help shore up economies hurt by the pandemic. As economic output contracts sharply, fiscal outlays surge, and central bank balance sheets double. Fiat currencies could come under pressure. Analysts including Michael Widmer and Francisco Blanch said in a report, investors will aim for gold. I've been on this channel screaming to you for 6 months now about buying gold. I've been telling you guys this about precious metals mining stocks for both silver and gold. I've been talking to you guys about buying Bitcoin over and over and over again. Why? Because history doesn't repeat itself, but it goddamn sure rhymes. It surely rhymes. I've been screaming this on this channel because I could see what's going to happen. If you read the book, The Creature from Jekyll Island, you know this was already going to happen. They've bailed out the auto industry multiple times. They've bailed out states. And now we have states like New York coming to the government for a bailout. We're already at 10.7 trillion. We just did a few more billion here. Another program. We're probably at about $13 trillion already. And that's why I block anyone who come on here trying to talk to me about some dollar milkshake theory, about modern monetary theory. I'm blocking you. I'm not debating with anyone about foolishness anymore. We don't have time to debate about foolishness. It's here in your face. It's a matter of, are you going to pay attention to what's happening? CEOs are getting paid $60 million to fail. Trump, your President Trump, putting the tax cuts. Hold on real quick. It says putting the Trump tax cuts will pay for themselves myth to bed. 1 second, because this audio keeps coming on. Recent estimates from the Treasury Department show that revenue dropped by 0.4% in calendar year 2018, a rare occurrence in American history, particularly when the economy is this strong. That's bad news for our budget deficits, which are likely to reach $900 billion this year. Now, remember, this is in 2018 when the economy was doing well. The tax cuts weren't paying for themselves then. A 0.4% reduction might not seem like much, but when it's huge, when put into context, inflation grew. Listen to this. Listen, they're putting it in your face, man. It says inflation grew by about 2% and the economy grew nominally by more than 5%. Revenue should have grown by 7% this year. Instead, revenues fell. They fell despite strong economic growth, moderate inflation, and unemployment at its lowest level in 50 years. So if we was having revenue declines in 2018 when the stock market was hitting all-time highs, what do you think is going to happen now that we're approaching $4 trillion, a $4 trillion deficit underneath a conservative president? What do you think is going to happen to tax revenues now? Sometimes I just want to scream because I have idiots come on here and try to talk to me about modern monetary theory because we are borrowing in our own currency. Think about this for a second. If deficits didn't matter, if inflation didn't matter, why do we have to pay taxes? See, you don't have to have a PhD. Think about this. If the government could just print money, if the government can just simply print $1 trillion here, $2 trillion here, $3 trillion here, why do we have to pay taxes? Why not the government just print the money and pay the taxes for us? We shouldn't even have to pay taxes, right? If you could just print money out of thin air, give everyone $100,000. Why even go to work, right? If modern monetary theory worked as well as they said it did, then we shouldn't even have to work. The government should be able to just simply print $100,000 to give everyone $100,000 a year. If inflation didn't matter, if deficits didn't matter, if budgets didn't matter, then just print money. Why go to work? Everyone could just sit at home, cancel it. Only an asinine idiot would say something like that. Only someone that's stupid would say deficits don't matter, budgets don't matter, printing money doesn't matter. We could just print $1 trillion coin. Right? Just give everyone money. Why work? It makes no sense. It's stupid. And only stupid people listen to stupid ideas. So let's get back to Chamath and I'll come back again.
And amongst boards. And it's where we need to start thinking about how the rules need to change so that average shareholders, retail investors, the stakeholders of these companies benefit more.
I'm just suggesting
and in times like this, hold on, Scott. And in times like this is where it gets exposed. So for example, instead of, the argument against this, by the way, that people always make is, well, the capital markets are efficient. And so when we do share buybacks, we allocate the capital more efficiently into other things. And what I would tell you in rebuttal is it's clearly not true. In a moment where we needed an economy to be resilient, what we had are people making masks out of socks and underwear, our primary healthcare workers forced to use rain ponchos to protect themselves, and people instead who actually were able to profiteer from the last 10 years of low interest rates and debt-based buybacks, buying beachfront condos and art and apartments in New York City. It's totally broken.
Thank God for people like Chamath. He has FU money and he's actually saying FU to the system. I want you to think about that. I should have pulled up some pictures of our healthcare workers having to deal with a pandemic, and they're using handkerchiefs and socks as masks. And they're taking garbage bags and using it as protective gear. And we have companies like 3M who make this protective equipment. But because they shipped all of our manufacturing over to China, chasing slave labor, we can't even get the equipment that we need because the capital markets are efficient. I mean, this is stupid. This is so stupid. It should be illegal. I'm all for free markets. I'm all for capitalism. It's inhumane and it should be illegal for a company to ship jobs overseas and pay a person $2 an hour and then come over here and sell that product and then have people talk to you about morality. I want you to think about that. For all of these people who claim to be that this is a Christian nation and this is a God-fearing nation, we're going to pay somebody $2, $3 an hour to make some shoes or a product that you're going to sell for thousands of % higher. And you're only doing that because you don't want to pay Americans a fair wage. But then you can come to the American taxpayer and get a bailout. And you're going to have people on here come talk to me about modern monetary theory. And they're going to talk to me about why debt doesn't matter, why the system's not broken. And then going to talk to and say, have the nerve to talk about socialism. You have billionaires talking about socialism while they're coming to the taxpayer to get bailed out. They're market wizards when their stock price is going up, when they're buying back their stock, when they're paying out record bonuses. The free market is working. You have Larry Kudlow. He comes on here and tells you everything is going to be fine. Look at the free market go. Look at President Trump. He's so presidential. And then a crisis like this happens and you begin to see it was all a fraud. It was all a sham. It was all a sham. Look at the oil industry. Based upon free market principles, these oil companies should have been out of business. But because they can go to the government, defer taxes, get tax breaks, get grants, get bailouts, they're allowed to stay in business. Yet you and I, we don't get access to that. Like I said, it's just you have to, at a certain point, you have to say to yourself that the system is broken. And this is why we need hard money. This is why gold matters. And people say, oh, you keep talking about gold. You know why I keep talking about gold? You know why I keep talking about gold? Let's take a look at gold. Let's see what is gold doing. Let's look at some gold. Let's look at gold futures. Look what gold is doing. And it didn't start doing this during the pandemic. Look, gold started breaking out back in January 2019. See, they're going to try to sell you, and Peter Schiff spoke about this. He's spoken about this time and time again. They're going to try to tell you that the economy was doing well until the pandemic hit. But I showed you guys that back in September 17th, the Fed was having to go into the repo market to the tune of $50 to $100 billion a day to prop up the stock market. Gold started breaking out back in January and February and April and May of 2019. It didn't just start going up because of the pandemic, because the Fed was printing trillions of dollars. From September up until January, the Fed printed $9 trillion to bail out Wall Street. So when you seen Tesla and all these stocks having these blow-off tops, it wasn't because they was knocking earnings out the park. They weren't selling more product. It was because the Fed was injecting liquidity into the system. And I told you guys about fractional reserve banking, how banks can legally loan out 90% of their reserves. So that means if you put $100 in the bank can take $90 of your money and create loans out of thin air. And they can rehypothecate that thousands of times over and over and over again. You can't do that with gold. You cannot print gold. You have to go find it. Look at Barrick. I've been talking to you guys about gold companies, gold mining stocks. Look at Barrick Gold. Pumping. Newmont Mining. Another gold stock. Pumping. This is a weekly chart. Let's look at a daily chart. Pumping. And we haven't seen nothing yet. Remember, the United States is just one country that printed 10 trillion. We're probably up to 12 now with these new programs. China's going to have to print money, Australia's going to have to print money. Russia's going to have to print money. Europe, the ECB is going to have to print money. Just showed Barrick. Another gold stock. Pumping. You have to ask yourself, who are you listening to? Royal Gold, pumping. And they're going to continue to pump. And I keep telling you guys about the wild card cryptocurrencies. Because see, if you understand cryptography is not something new. Distributive computing isn't something new. These things have existed for decades. Satoshi Nakamoto simply came up with an ingenious invention where he was able to blend the two to create a digital currency with some game theory built into it, where in order for you to actually, you have to, like the same way you mine gold, you have to mine Bitcoin, which means what underpins Bitcoin is electricity, because you actually have to hash and mine and solve a block and then append it to the blockchain. And then you chain those blocks together with the hash of the previous block. And the only way that you can do that is you have to do proof of work. Keyword, proof of work. But you have people coming on here saying Bitcoin's a scam. Gold's a scam. Gold's a rock. It doesn't do anything. Your money should not do anything but be money. Your money should be a store of value, a unit of account, and a medium of exchange. That's all your money should be able to do. Who owns Bitcoin? We own Bitcoin. The people. The people who are participating in the consensus of the network, right? True democracy. There are rules to participate in the Bitcoin system. And you have to abide by those rules if you want to participate in the network. You only can spend UTXOs that you own. You can't spend Bitcoin that you don't have. That's what Satoshi was able to solve. The double spending problem. There was hash cash with Adam Beck before Bitcoin, but that's what Satoshi was able to solve. And if you try to spend Bitcoin that you don't have, and a miner tries to cheat the system, he will be punished because he will spend thousands, if not hundreds of millions of dollars on electricity to try to fraudulently put a transaction in a block that's not supposed to be there, which will be rejected. It forces you to have to be honest. And that's why we need honest money, to force people to be honest. This is dishonest. Running the company into the ground and getting a $60 million severance package is dishonest. Buying back your stock to push stock prices up so that you can get a bonus is dishonest. Lobbying politicians or donating to their campaign and you being able to get access to bailout funds as well as payout bonuses is dishonest. Harvard having a $40 billion endowment and getting $9 million in stimulus money is dishonest. And people like Chamath, who again, he's one of the biggest holders of Bitcoin. At one point, he had over 5% of the entire Bitcoin supply that was currently in circulation. See, I don't make this stuff up. Some people come on and say, oh, who are you? You're not an economist. You're right, I'm not. I follow economists. And I compare a Peter Schiff to what someone like AOC is saying. And I'm saying to myself, what AOC is saying, that's Alexandria Ocasio-Cortez, is straight up batshit crazy. I'm listening to Austrian economists and I'm saying that makes sense, that Americans should save money. 63% to 68% of Americans have less than $500 in their savings account. That's foolish. That's dangerous. That's dangerous. I would never promote an economic system that tells you, or that promotes, I shouldn't say rewards because it doesn't reward you, that having households having $14.15 trillion in household debt, that's good, that the consumer is strong. Because we're seeing now the consumer isn't strong. The consumer's weak. The consumer's on its last leg. Guys, these jobs are not coming back. This V-shaped recovery that they're talking about, it's not going to happen. It may be a V-shaped recovery in the stock market. But it's not going to be a V-shaped recovery for you, because I told you guys, there are two economies. There's the financial economy, where the 1% play, and then there's the real economy, where you and I are. And now they expect you to live for 10 weeks and only give you $1,200. And I was telling you guys, you think that these big companies, that they're going to have to wait to get their bailout or get their stimulus? Harvard has $41 billion in their endowment, and they were still able to get $9 million in stimulus. Yet you have people who still haven't even received their stimulus check yet. Think about that for a second. Think about that. You have Keynesian economics and you have Austrian economics. One is based upon hard money, supply and demand. I will only spend wealth that I have. And then you have another one that's based upon debt, that's based upon consumption. And we're seeing where this has gradually shifted us. Like Chamath said, you have people, healthcare workers, having to use handkerchiefs and socks as masks because we deindustrialized our country, chasing cheap labor to bring profits to shareholders. And we need a new system. We need a shift. We need a change. And Bitcoin is that change. Gold is that change. Silver is that change. Because politicians will do what politicians always do. They will look to get votes. And they will cheat the system. Man is flawed at his core. It's man's nature to lie, to deceive, and to cheat. Corporations should keep cash on the balance sheet. Apple, as far as, we're not talking about the company, we're talking about how they're managing the finances of the companies, what we're speaking about. We're not talking about the cheap labor, the overpriced products. We're talking about how they're managing their balance sheet, how they're keeping cash on hand. That's how a company is supposed to conduct themselves. And Apple did a lot of stock buybacks too, but they did it in a way where they didn't put their company at risk. Whereas Boeing put their company at risk. American Airlines put their company at risk. Why? Because of incentives. They were incentivized by cheap interest rates, by the Fed, and by getting bailed out from the government to do so, when they should be being forced to have to restructure the company and file bankruptcy. So I encourage you guys, go pick up The Creature from Jekyll Island. Go and read End the Fed by Ron Paul. Some good books. Go and look at a Peter Schiff, an Austrian economist, and he hates Bitcoin. And he makes some good arguments about Bitcoin, but he will be wrong too. He's been wrong for the past decade, and he will keep being wrong. Everyone can't get it right every time. But I don't have any room where I don't have any patience, I should say, to sit up here and debate with anyone anymore. Like, you see me, I'm blocking people immediately. If you come on my channel talking foolish, I'm blocking you, because we don't have time right now to be spreading misinformation. We are in some serious times, and it is time for Americans, those of you who want to be serious, to wake up. Now, I want to preference something, because a lot of you keep asking me this over and over again. You keep asking me. You know, should I buy gold? Should I buy gold? If all you have is $500, you don't have any business buying gold, right? Because you don't have any wealth to protect, right? Gold is for people who you've been working your whole life, and you've built up a pension, you've built up a 401k, and you have $50, $100, $200, $300, $400,000 in savings or more, and you want to protect the purchasing power of the wealth that you have, you go and buy gold. For those of you who are, let's say you're poor or you're on a fixed income, you need to be trying to invest in yourself to become more skillful, to command more money in the marketplace. Right? Gold is about preserving and protecting wealth. If you are wealthless, you don't have any business buying gold, right? If you're wealthless, you should be looking at crypto, right? Again, and guys, don't take this the wrong way. I'm not trying to belittle you or put you down. I'm trying to give you some solid financial advice, quote unquote, even though this isn't financial advice, this is for educational purposes. Right now, if Ethereum goes back to all-time highs and you're able to 6x your money, right? And you put in $500, you can make potentially almost $3,000 or maybe more than $3,000, right? You're not going to get a 5x in gold. Not right away, right? It's a $9 trillion market, gold. Ethereum is a $20 billion market. Which one do you think is going to give you the greatest risk to reward? It's going to be Ethereum. It's going to be Bitcoin. It's just common sense. Your government just printed close to 12 trillion now if you count these new bills that's been passed over the week. You're telling me that you don't believe that the entire crypto market can't get 1 trillion? Come on, use your brain. That's one country. Right? So I want to make that clear. If you don't have wealth, gold and silver is not for you. That's for people that have wealth and they're trying to preserve and protect their purchasing power. For people who are trying to make money, you may want to invest in some skills. Maybe, like I said, learn how to code, learn how to trade, learn how to go build a dApp on Ethereum and go build a business or something. That's what you need to be doing so that you can start building wealth and gold and silver. But if you don't have any wealth, if you're wealthless, you shouldn't be buying no gold coins, right? You should be focusing on crypto. And with that being said, guys, there's 234 of you watching this. Hit the like button. I'm going to come into the chat and I'm going to see what kind of questions you guys have. Adrian said, so invest in skills. Yes, invest in skills. Take a sip of water and answer some of your questions. And thank you to those of you who have donated. "100% pressure bust pipes and makes diamonds." You know, if you don't have a savings account, you shouldn't be focused on gold. You should not be focused on gold. Laugh Out Loud Motorcycle says, I'm sitting on a ton of Chainlink. I like Chainlink. I don't own any Chainlink, I don't believe. I own so many different cryptocurrencies. Sometimes I lose track myself, but I don't believe I own any Chainlink. I own 0x though. I don't own any Chainlink. Tezos. Chainlink's a good cryptocurrency. Great question, Joel Hogan, because I missed talking about that. Right here, this is Bitcoin, right? Every 210,000 blocks that are mined, right? The block subsidy gets cut in half, right? So Bitcoin is deflationary. It's not inflationary, right? So as you can see, every 210,000 blocks, the actual new Bitcoin that's created, it gets cut in half, right? So this blue line is the actual Bitcoins in existence. This orange line is the inflation rate in Bitcoin. And you can see the inflation rate in Bitcoin goes down, right? Because every new block that's created, you have the very first transaction. That's the Coinbase transaction, right? Right now it's at 12.5. So every new block, every 10 minutes, a new block is formed that has all of the transactions in it, about every 10 minutes. The very first transaction is going to have 12.5 fresh Bitcoin. We're coming up on the halving in about 20 days. That block subsidy, meaning the new Bitcoin created, is going to be cut in half from 12.5 to 6.25. And you can see this blue line. You see how it gets flat over the years? This is 2040, 2044, 2048, 2052, 2056, 2060, you can see that the curve, right, of new Bitcoin created, it flattens out. So once we get to 2140, there will never be any new Bitcoin issued. There will never be more than 21 million Bitcoin. So at that point now, the supply, that's it. No new supply will hit the market. No new supply will hit the market. That's true hard money because it's deflationary. You cannot just print more of it. So that's a good question. Yeah, I believe that I had owned Chainlink, but then now that I think about it, I probably don't, guys. I own a lot of different cryptocurrencies. I own a lot of different cryptocurrencies. I have to look. I don't believe that I own any Chainlink though. I own Tezos. I know that for a fact. I own a little bit of EOS. I got airdropped Ontology. I used to play around with Tron. I definitely own Monero. That's my favorite coin. Bitcoin, 0x. I like Basic Attention Token. I have a little bit of that. Augur as well. I'm not a fan of Litecoin at all. I don't think Robinhood is good for buying cryptocurrency. Not your keys, not your Bitcoin. And I was informed that when you buy cryptocurrencies on Robinhood, you don't actually get cryptocurrency. You get like the paper version, like a rehypothecated version of it, like a derivative of Bitcoin or whatever crypto they're selling on there. So I would not encourage you to, if you want to buy Bitcoin, to buy any Bitcoin on Robinhood. For those of you, I always tell you guys to use Coinbase if you're new and you don't really understand the technology and you don't understand hardware wallets. You're just getting started. Go on Coinbase, buy you your first bit of Bitcoin or Ethereum. Those are the really only two coins right now that I would really heavily tell people, like, if you were serious about a project. All of these other different cryptocurrencies, they carry risk. Lots of risk. A lot of you keep asking me, how do I buy Bitcoin? How do I buy Bitcoin? I have a video on my channel, and I'm not trying to be condescending. It says how to buy and sell Bitcoin and cryptocurrencies on Coinbase, right? It's here, right? All you have to do is go and look. This video only has 1,300 views. And a lot of you keep asking me the same question. It's here. Go and look. It's right there. Now, once you get your feet wet and you get a little bit of experience, then you can go and you can start buying. You can go and start buying a ledger, a hardware wallet, and storing your cryptocurrency on a hardware wallet. I'll put it in. I've put it here multiple times. I'll do it again. Paste. But again, I like to keep things simple for a lot of you guys. If you're new to cryptocurrency and you're looking for something that's stable, isn't even a word you can use for crypto because it's a volatile market because the market caps are thin. I would be focusing on Bitcoin and Ethereum. That's where I would be putting my time at. Yes, there's a lot of, other crypto projects that show some promise. Like Chainlink is pumping. Chainlink's been pumping really well. You have Cardano. I'm not really a fan of, I told you guys before, I used to be a fan of Cardano, but Charles, he keeps, stumbling out the gate with Cardano with the project. You have Neo, you have Maker, that's the, you have Ontology. There's a whole bunch of different cryptocurrencies, VeChain, Thor, Digibyte. There's a lot of different projects, and you can see, look how small their market caps are. This is a gamble. if you're buying these cryptocurrencies down here, these are gambles. They may pay off. You may buy one of these cryptocurrencies. You may buy Digibyte for a penny, and Digibyte may go to 10 cents or it may go to 20 cents, and you may be extremely excited. Maybe not. You're gambling. I like to focus on where the infrastructure is being built at. I like to focus on where the capital is being deployed, and it's being deployed around Ethereum and Bitcoin. And if I'm an investor, I want to be focusing on where the big boys are playing and not really trying to chase these, I would call them like sort of like a penny stock crypto projects. Now again, if you want to, just know that you're taking on risk, right? You're taking on a lot of risk if you're buying those cryptocurrencies. Now, the thing about risk and reward is the greater the risk, the greater the reward. I agree with you 100%, JG. People say, oh, Bitcoin's hard to use. If you can copy and paste, I don't see how it's hard to use. I don't get it. Right? Like if you can copy and paste, then you should be able to copy your public address, right? And be able to, copy your private key somewhere or screenshot it and print it out somewhere. Like this, if you can use social media, you can use cryptocurrencies. It would never make sense to me. Like, I don't get that. USDT is a stable coin. Tether is basically supposed to be backed 1-to-1 with the US dollar. USDT is Tether. I would stay away from these stable coins. I would not touch them. I would not touch them at all. A lot of you keep asking me about Carrot Bars. Guys, if it's a gold company that's an affiliate program, you know where I stand. Stay away. Just buy your own gold. Right? Buy your own gold. There's no reason for you to be playing with affiliate programs with your gold. Buy your own gold. Store your own gold. Simple, right? Not complicated at all. Buy your own gold. Store your own gold. If you're playing with these companies, listen, you're wasting your time. Bitcoin ATMs are good if they allow you to do no KYC. Right? KYC stands for know your customer. If you can get around the KYC laws where you don't have to basically reveal who you are, show your identity, and I believe that some Bitcoin ATMs allow you to do that in other countries. Here in the States, depending on which state you live in, like here in New York, to use a Bitcoin ATM, you still have to produce like some type of identification. But in other places, you don't have to. Yes, that's one of the best places to buy your Bitcoin. But understand, you are going to pay a high premium to use that Bitcoin ATM. Some places it's like 6%. I've seen it as high as 10%. I'm a bull on the crypto one. I'm a bull on DeFi. I've spoken about the whole DeFi thing multiple times. If you go back to the internet, right, when the internet was first being built and deployed, and you look at all of the different protocols from the TCP/IP layer to SMTP, all the way from HTTP, all of the value, all of the wealth that was created for the internet, we didn't get a chance to participate in that wealth transfer as far as owning the protocols, owning the actual underpinnings of the internet. Most of the wealth was created on top of the internet, the layers built on top as far as, Amazon, Hulu, Netflix, AT&T, et cetera, all of these different tech companies. I believe it's going to be the inverse for projects like Ethereum, where most of the wealth is going to be captured by the protocols, which is why I focus heavily on a Tezos or a Ethereum, protocols where people are going to be building applications and dApps and tokens and things launched on top of the platform. I believe that's where the real value is going to be, where the protocols are going to capture the wealth this time. So when I see DeFi, yes, they're having a lot of problems with the whole, I believe it was DeForce that was recently hacked. There's a lot of bugs. Go back to the original internet and go back to the Netscape days. Like when the internet was only used to watch porn, like people were saying, and for criminals. We are first right now. We are very, very early. And if you look at DeFi as like Lego blocks, where Ethereum is the base layer, then on top of that, you have Maker DAO and DAI. When you have Maker and DAI, when you understand that, and then you have all of these other different different tokens and dApps that will be built on top of these protocols, that's where the real wealth is going to be. And that's why I focus on that. And I believe that that's where the real value is going to be. So I'm a bull on DeFi. I mean, think about it. You don't believe that Ethereum or the whole DeFi space can't capture $1 trillion globally? Why can't they? You know, Mr. G said he believed DeFi could be double spend, right? But what you have to understand is that you can't underestimate corporate greed. And a lot of corporations aren't going to be able to use Bitcoin. It's very hard to develop on top of Bitcoin with the whole stack-based programming. So when you see Solidity and you see Ethereum, it resembles, it's sort of like the old system, right? So where do you think a lot of these, venture capital firms and, a lot of these people who represent the old guard, where do you think they're going to deploy money? Somewhere like Bitcoin that's trying to completely break the system, or Ethereum that's trying to, reinvent the wheel. Most people are going to flow towards Ethereum. So, right, you can't underestimate that. So that's, even if it's a double spend, you have to play that. You have to hedge yourself that way. You can't be too heavy in the decentralized space. Like I'm a libertarian, right? I believe in the whole idea of decentralization, which is why, I own a lot of Bitcoin, but I'm no fool either. I know a lot of people, big money people, are going to gravitate towards Ethereum because it resembles the old system, right? And that's why, when I see that, even if it's the potential for the whole, double spending thing, capital is still going to flow there because it resembles the old system. And a lot of people, they're creatures of habit. So that's why I focus on like the whole DeFi space, because they're going to capture a large percentage of the market. They just are. And they have the branding and they have the developers. Will your crypto course cover everything on crypto or just what's important? Right now I'm in the phase of scripting everything for the crypto course, and I have someone building the website for me. The first portion of the course is going to be based around Bitcoin. The reason being is that to understand blockchain technology, to understand cryptography, to understand distributive computing, you have to start with Bitcoin as far as cryptocurrencies are concerned, to understand what a blockchain is, what is it meant for, and what it's not meant for, right? So we're going to focus on the building blocks of Bitcoin, focus on some basic cryptography principles, focused on different wallets, different exchanges, like what's a DEX versus what's an exchange like Coinbase, how to store your coins, hot wallets, cold wallets, talking about what a wallet does, how a private key is generated and then ran through ECDSA to get the public key, and then hashing the two together. Like, we're going to focus on basic cryptography principles, focusing on inputs and outputs of UTXO, what your wallet does, how it broadcasts transactions to different nodes, how those nodes then basically put those transactions in the mempool, how miners pick it up from the mempool, the basics of Bitcoin. And then my next goal after that is going to be to focus on Ethereum and the whole idea of the building blocks, like looking at Ethereum more like a Lego, like sets of Legos. And I want to get someone that's really good with programming to give you some basic concepts as far as how to develop and program with Solidity and build your own dApps. The problem with that is going to be pricing. It's not going to be cheap to do so. And see, this is the problem that I'm running into, because I'm already going to have to come out of pocket probably like $2,000 for the website and the materials, and then another probably like $1,000 for like a lot of the editing software and stuff that I want. So to get a person because I want a real developer, right? I don't want some guy who watched a few YouTube videos. I want a person that's actually built a project. The problem is that getting someone to come and teach a course, you're going to have to pay them, which is then going to have to increase the price of the course. So that becomes the give and the take. Where are you going to price these things at? Are you going to have different tiers for people who just want to learn about Monero, Bitcoin, and Ethereum, and then have a higher tier product for people who may want to really learn how to develop and look for jobs? Because I really want to try to potentially in the future maybe partner up with some crypto projects and be able to treat this course as like a feeder system for people who may be looking for jobs in this space. Right? So that's going to be a problem, right? Because as I said before, like to get a good developer to come teach, like these people are not going to teach for free, so that becomes one of the problems with like really trying to get that high level stuff in here, the stuff that matters, because you may have to increase the prices to like $197 for that type of a product where a person is going to actually like really be teaching you how to get a job or how to build your own dApp on top of Ethereum. Like you got to think about that. Like a person teaching you how to build, for example, let's say that you want to build a poker dApp where like you can have people playing poker using the DAI token, right? The stablecoin DAI. That website may generate you a living, an income. So I feel like $200 would be a steal, but I don't think I can get someone that's going to come teach for just that small amount of money. So that's why I said I have to really take a step back and think about that. I was talking to this guy from Blockstream. He used to be employed by Blockstream. Now he's working on his own project. It's like a combination, and he has some like junior developers underneath him that he was trying to connect me with. But again, they're busy. Will they have enough time to really commit to the project? So there's a lot of different things. So I think from the beginning, we're just going to really start with the underpinnings of cryptography. Because, like a lot of people don't understand cryptography's been around for a long time. Right? If you, you go back to even the ancient Egyptians, back in, 1700 BC, they were, encrypting data, right? As far as hieroglyphics is concerned, Julius Caesar had the Caesar cipher back in Rome. So cryptography's been around for a long time. It's just that we're more advanced today as far as what we're using for cryptography. And like I said before, I want to have a balanced course as far as that type of stuff is concerned. But again, you have to crawl before you walk. And I believe that it's better to start small, because I don't even know if there's enough demand for this product. To be quite honest with you, like I think that I'm probably going to lose money on this product, on this venture. And that's why I'm taking it easy, and I'm not going to sink too much money into this because I don't want to put, $15,000 into this or $20,000 into this, and then there's not enough demand for the product, right? That would be stupid. So you have to crawl before you walk. So again, like I said, we're going to start with the basics of Bitcoin, then Ethereum, then Monero, really talking about digital signatures, ECDSA, SHA-256, the things that put everything together, and, showing you where to buy it, how to store it, stuff like that. Now, some of you may say, oh, well, why not just put that stuff on YouTube? As you can see, YouTube is purging crypto channels, right? So like I would put the stuff on the channel, but YouTube is basically going after crypto YouTubers. So that's going to be a problem, right? Like Tone Vase, I believe his channel was taken down. So that's going to become a problem. So you can't do that. You can't put it on you can't put that type of content on YouTube anymore because YouTube's going after that content. So that's why you have to put it on a membership site. El Cool J said crowdfund the course. I'm not going to do that because then I'll be labeled the scammer and everyone will be calling me polite and Umar and all that. So I'm not going to do that. I'll rather use my own money and I'll sink and swim on my own dime. But thank you for the idea. Alexander Wilson, thank you for the donation. He says thoughts on companies allowing crypto to use a remittance for gambling. I don't have an answer for that one, Alexander Wilson. I don't really have an answer, to be quite honest with you, for that one. If I was you, I would focus more on like dApps. I know that there's a dApp built on top of Ethereum where they have a lot of gambling and stuff like that. And that's why I said before, you may want to focus on looking at the protocols. But as far as like companies, businesses, I don't really see any public companies that I would want to invest in that's playing in the blockchain space. And again, this is not financial advice, just my opinion. I could be wrong about that. I don't really see any companies. I know that was it Oshkosh? I believe what was it? It was a company that was playing in the blockchain. I think it was Oshkosh that was trying to play in the blockchain, if I'm not mistaken. I forgot the company. It was another company. Damn, I forgot the name. It wasn't Oshkosh. Damn, I forgot the name of the company. I can't think of it. I can't think. I lost track of it. I forgot the name of the company. Overstock. I think it was Overstock. Yeah, I said Oshkosh. I meant to say Overstock. They were playing in the blockchain space for a while. I haven't looked at let's see what their stock is doing. I haven't looked at them in a while. They were trying to develop something in the blockchain. Let's see what their stock's been doing. That's the company, Overstock. I said Oshkosh. The hell am I talking about? Yeah, look at this. They're doing OSTK, right? So let's pull them up and see what they've been doing. They look like they're getting crushed. Look at these gold stocks. They're performing so well. Overstock. Yeah, see, look. They were playing in the blockchain space, and look at this. The stock got crushed. Like I said before, I don't see any companies that are really public companies that I feel are playing in the blockchain space in a way that's going to be profitable, right? I don't see it. I'll be honest with you. I don't see it right now. I think you're better off just investing in the protocols. If you really want to be in the crypto space, invest in the protocols. But look at this. When we had that blow off top, look at this stock. It went from $25 all the way up to $90, and then look at this. It came crashing down. So as I said before, I don't see the need to be looking at public companies. Thank you guys for the donations. I greatly appreciate it, Mr. Supreme Cinema. Then we have another one. The information is far more valuable than 197. Consider pre-orders. I know that be easy, and that's what I was trying to say. I want to take it slow, right? I don't want to try to jump out the window with this idea and spend too much of my money and not be able to make it back, at least. Because I don't even think I'm going to break even on this project, to be quite honest with you. Because I think before it's all said and done, I'm probably going to have to come out of pocket, like I said, between the website, the editing software, and some other products that I'm going to buy. I'm probably going to, before it's all said and done, probably spend like $3,500 to $5,000. And I don't think that there's enough demand for the product to even break even. So I have to think about that. But I pre-orders. I'm going to do pre-orders anyway and have a discount on the course anyway, just to get an idea of how many people are going to actually be coming into the course, because I have to pay for hosting as well, based upon how many people is going to be on the site, because you don't want the site running slow. Demetrius L. Flag, thank you for the donation. No, you will not be a scammer because you are giving us something tangible. In addition, we can make our own choice to donate or not. Please don't dwindle your worth to a peasant like Polite. You're right. You're right about that. Thank you for the kind words. Thank you for the kind words. Appreciate it. So that's what I said. That's where I'm at right now. I'm feeling things out to see. But like I said, the website's being built. I already brought the domain name. I paid the guy to start building the site. So he's already working on the site and everything like that. So recording the content's not going to be hard. It's really just a matter of scripting it, right? Because it's going to take hours to really flesh out my thoughts as far as to where I want to start. Like I said before, I really want to give you guys an understanding and an underpinning of cryptography, because so many people say that Bitcoin's a scam, and they don't understand that cryptography has been around since the 70s. Like, going back to RSA with Diffie-Hellman, like this is not new technology. Cryptography is in everything that we use. It's in your cell phone. It's what sets up your websites and protects your data. Like, cryptography is not something new, and we've had other crypto projects like Hashcash with Adam Beck, and Nick Szabo with BitGold. So it's not something new. It's something that's been around for a while. Thank you for the donation, Mr. G. Ethereum is similar to Bitcoin. The only difference is that Bitcoin's not a Turing complete language, whereas Ethereum is a Turing complete language. So you can do more with Ethereum than you could technically do with Bitcoin, like with the whole smart contracts. Like, you can develop on Bitcoin, but it's hard, right? But then you have to understand, like, blockchains, they're not meant to do a lot of different things. They're meant to do one thing and one thing really well, but slow. Like, Bitcoin is meant to be a settlement layer, right? And be a peer-to-peer settlement layer where you and I can exchange value. That's it, right? Bitcoin's not meant to be all of these other different things. And sometimes when you're dealing with people who want to sell you stuff, they try to sell the blockchain like it can do all of these different things. A blockchain is just a database. It's a very slow database, but it's efficient and it's distributed. See, that's the most important thing about understanding the power of Bitcoin, is that it sets up a network where you don't have to trust a third party. You don't trust anyone. You verify. And that's one of the key things with Bitcoin that people miss. Like, you're basically coming into the network and saying, I don't trust anyone, right? I want to be able to verify everything that's happening in the network. That's the power of Bitcoin. Our system now is all about trust, our monetary system. You trust the Fed. You trust your bank. You trust PayPal. You trust Google with your data. When you're coming into cryptocurrency, the whole purpose of a blockchain is that you don't trust the other person on the other side, that there may be a nefarious actor in the middle. So you want to be able to protect your data, encrypt your data, and deal with it in a way where you can make sure that you're validating everything that's happening to be true. So it gives you true power to really be able to see what's happening, as opposed to, just trusting someone. So, but in order to understand Ethereum, you have to first understand Bitcoin, because remember, Vitalik was going to build Ethereum on top of Bitcoin, but then he realized Bitcoin's slow, it's clunky, it's not easy to build on, which is why he created Ethereum. But then he marketed it and promoted Ethereum as being faster than Bitcoin and can do more transactions. And then we see in CryptoKitties, that's not technically true, right? There's limitations to Ethereum as well, because blockchains are not designed to be, these fast things like, like other protocols. It's just not, or databases, I should say. So that's the whole purpose about it. Bitcoin does one thing, and it does one thing really well. It allows you and I to transact over the internet and send value in a secure way, in a distributed way, in a decentralized way, and not trust a third party. As I said before, Alice can send Bob $50,000, $1 million at 4:00 in the morning, all the way to Australia with no middleman, right? I don't have to go to a bank and fill out any paperwork or any information. I don't even need to know who Bob is or what Bob is. I just need to know that Bob has a public address and that he can access those funds. I send it to him, and that's done. That's it. And that's the power of Bitcoin. True peer-to-peer decentralized money. And as you can see now with all of these bailouts, there are no bailouts in Bitcoin. No one gets bailed out. True hard money, true money for the people, by the people, for the people. And listen, Bitcoin's not for everyone, right? Some people, they like to be sheep. They like fiat money. They like, losing 3% every year. They like being able to call their bank and talk to someone. And if that's what you're into, it's nothing wrong with that, right? But for those of you who want true freedom, really have true, to be your own bank and have true power over your money, then you want Bitcoin. And like I said before, you have people like Chamath, as I said before, he has 5% of the Bitcoin supply. And I put up a post. Let's go look at the post, because this was in 2017. Because, I'm an OG in the Bitcoin space. Listen, I lost a lot of money. I made a lot of money in Bitcoin. I shared this on my community tab, and it says, Social Capitals, Chamath says, Bitcoin is going to $1 million in the next 20 years. Chamath, who first bought Bitcoin years ago at an average price of about $100, still believes the cryptocurrency has much further to go despite the monster rally this year. Remember, this was in 2017. I think this thing is $100,000 a coin, probably in the next 3 to 4 years. And I think it is in the next 20 years, $1 million a coin. And the reason why you can say that is that, as I showed you this before, when you see Bitcoin's monetary inflation, it's true hard money. Like, Bitcoin is more deflationary than gold. Because remember, gold still has a positive stock to flow ratio, as far as every year you're pulling out 3,000 tons of gold. Bitcoin, once you get to 2140, that's a wrap. It's it. It's over. It's done. No new Bitcoin will be created. And then you have to factor in people who lose their Bitcoin. You can't sell Bitcoin if you lose the private keys, you lose your Bitcoin, right? So that puts a floor underneath Bitcoin's price. And then you have to think about all of the money that's being printed. Do you recommend a person getting a chartered financial analyst's distinction? I don't see how it can hurt you. I don't see how it can hurt you. Right? I don't see how getting that information can hurt you. I don't see how. I mean, a lot of that stuff you can kind of learn on your own. Like, do you want to be a financial analyst, or are you saying you want to get help from a chartered financial analyst? Like, are you? Let's dive a little bit deeper in that. Do you want to be a chartered financial analyst, or do you want to get financial advice from a CFA? Do you want to be a CFA, or do you want to get advice from a CFA? I'll wait for you to post your question again. Want to be? I wouldn't discourage it. I believe that we all have to go down paths to really find ourselves, right? And I think that one of the biggest problems that we have is we overthink what if we fail, right? Because that's always in the back of our mind when we embark on something. What if I go to college and I take out these loans and this industry contracts and they're not hiring anymore, right? I wouldn't focus on that. I would focus on the journey. When I first started, when I went to college, I put up my basketball highlights, right? I was only focused on basketball. That was my journey that I was going down. And at the time, I was going to school for, I believe, sports medicine. And I had no interest in medicine. That was just the easiest major that I could take at the time to get A's so that I can be eligible to play basketball, because I was the typical, jock. But by going down that path led me to one of my old teammates in the locker room talking about a network marketing company, which then led me to going to one of those, presentation meetings where you get three, that gets three, to then me joining that network marketing company, eventually next year quitting the basketball team, then dropping out of school, then making money in the company, but then the company ended up having problems, losing a lot of the residual that I had in that company, then having to go back to school and going back to school for financial engineering, and then dropping out of school again, and then going and working at an investment bank, and then quitting from there and going to start my own thing, right? So I had to go down that, path, right, to get to where I am today. It wasn't just something that like I didn't have it figured out when I was 18, 19. Like people try to tell you like, oh, I knew what I wanted to be. You don't know what you want to do. Like you got to go down that path. And as you grow as a person, as a young man or a young woman, you begin to mature and you find what it is that you like and don't like and what works for you. But if you don't go down that path, then you don't never really get to find yourself. And I think that that's one of the key things. And then along the way, I played around with day trading currencies. And then I tried to mess around with options and realized the whole Greeks and everything, that wasn't for me. I went to S&B Capital. I learned how to day trade stocks. Then I blew a $30,000 trading account. Had to go start all over. Then I got into affiliate marketing. I joined, it was Jonathan Budd's futuristic marketing. That was garbage. Then I went to Mike Dillard. Then from Mike Dillard, what was the next guru I went with? Then I came across Empower Network with David Wood and David Sharp. And then I joined Wake Up Now. Then Kirby stole the money from Wake Up Now. Then I went from Wake Up Now. I started doing Teespring. And then that's when I really started making sales. But I was working at the time as well. So I had money to really invest in pay-per-click marketing and do the whole PPC thing with the whole Teespring thing. So then I did the Teespring thing before everyone was doing it, started making money there. Then I went to Peerfly. Then I was doing JV Zoo. But remember, right, it was a lot of things, along the way that got me to where I am today, right? It wasn't, I didn't buy one course and just become a millionaire. I didn't, watch a Ty Lopez video and become successful. Like it was going down that path. So as far as being a CFA or going down that path, only you truly know if that's for you or not, if that's something you want to do. And if you make up your mind that that's the path you want to go down that path and own it though, right? Own all of the good and the bad that comes with it, right? Like don't go down that path and then get frustrated if it doesn't work for you, right? Like go down that path and know that there will be pros and there will be cons and take everything that comes with it. Like one thing about me, I don't dwell on a lot of the losses that I've went through in life. I just bounce back. I've been through a lot of different ups and downs as an entrepreneur. I've seen a lot of products and services come and go. I've seen a lot of people come and go. And I've tried a lot of different things. Crypto, I would say that Teespring and affiliate marketing probably was the first thing that really worked for me on the internet. Like I've made money, but I'm talking about like real life-changing money, like money that you can live off of. I would say that Teespring and the affiliate marketing stuff was probably the first thing that I really ever did on the internet and actually made money. And then I came across, the whole Bitcoin stuff, and the problem with Bitcoin is that when I was dealing in Bitcoin, we didn't have a lot of the stuff we have today. And I got burned in Mt. Gox, and then I got burned with Butterfly Labs, and I lost, well over 80 Bitcoin, messing around with those exchanges and ASIC mining companies and stuff like that. But again, I learned, like I said before, I've taken some L's. We all would take L's. Let's see what else is going on here. Yeah. Like Taylor said, don't be afraid of commitment. Like just it's all part of the development process. I never heard of that book, Zulu Immortal, 10 Roads to Riches by Ken Fisher. I know who Ken Fisher is, but I've never heard of that book before. Ray Dalio's right, John, on Lycos. I spoke about this the other day on with Dave Ramsey. Think about it. Dave Ramsey has 1.65 million subscribers, and I guarantee you most of them don't own gold. So when you see the herd coming into gold, you're going to see gold go parabolic. Like if we look at the chart right now of gold, gold's tiny. Even at $9 trillion, that's a global asset, and it's a fixed asset. What do you think is going to happen when you have global pension funds have $18 trillion, the top 300 global pension funds? They're heavily underallocated and underinvested in gold. What do you think is going to happen when they get involved in gold? Gold's going to pop. What about all these banks? Didn't think about the manipulation that these banks are doing to the price of silver. Think about like ETFs like GLD, where they're selling more paper gold than they actually have physical gold. The GLD is not holding that gold in no vault. You know that, right? So understanding that when the world finally wakes up, see, and Andreas Antonopoulos, he's spoken about this really, really eloquently before. People don't care about money until it breaks, right? People don't care about money until it breaks. Then everyone cares. Prior to 2008, no one gave a F about derivatives, credit default swaps, CDOs, CDO squared. No one cared until they lost their job, until they seen their pension plans drop 50%, until they lost their house. Then everyone started to care about derivatives and care about what's happening in the stock market. And the same thing's going to happen now. No one cares about pandemics. No one cares about China. No one cares about Cold Wars until, whoa, this thing may have started in a lab in Wuhan. Now everyone wants to become an expert in 5G and an expert. People don't care about things until they break. And it's the same thing with money. No one's going to care until they're going into the supermarket and a gallon of milk is $10. Then they're going to start saying, whoa, all of this stimulus wasn't a good idea. That's when people start to care. And then that's when you get the herd where they come running in. Because remember, I told you guys, I gave you the analogy about liquidity. Liquidity is like a house party. This is how most markets work, right? Because market makers are corrupt. You see a party, right? Well, the party only can hold 500 people. So listen, you see people going in there, they waiting on the line. Everyone's dressed up nice. You like, I want to get in that party. If you smart, you want to get to the party early, right? You don't want to be stuck on a line, and you don't want to be in there when it's jam packed, because everyone knows you want to get in the party early and you want to get out the party in the middle before it becomes too crowded. So 300 people's in there, 400 people's in there, 500 people's in there. The party's occupied, right? And then at 1 minute, everyone wants to get out. That's the stock market when it starts to crash. The problem is there's only one way in. That's the liquidity. So if there's only one way in, you have all these people trying to get out. What happens to prices? You see stocks take the elevator down because everyone's trying to get out at one time and there's no one to buy. Well, gold's going to be the inverse. Everyone's going to be trying to get into the party, but you're already going to have 500 people in the party. So now you're going to get this explosion in price where you're going to wake up some days and you're going to see gold jump $200 in a day, $300 in a day. Because, right, it's going to be so much demand for it and so little supply. Raul Paul is really good, Brandon Hicks, really good. I follow him. I'll put his chat up here for you guys, for some of you who don't know who he is. He's really, really good. He has his stuff down packed too. Real Vision Finance. I follow him as well. Right? You can subscribe to his Real Vision Finance for like $1. I think like $1, $1. Go follow him. He's really, really good. This is the channel for you. I'll put it in the chat for those of you who don't know. Really, really good content. Really good content on the financial markets. There's 205 watching, guys. Hit the like button. Really good content. The Internet of Money is a really, really good book. AppMex is a good place for physical gold. There are better places, but I like to keep things simple, stupid, right? Simple, stupid. I don't like to overcomplicate things. Darren Blake 305 says they're saying gold might hit 3,000. Of course, I believe it's going to hit it much higher. No, I've heard of the book though. Fed Up. I haven't read the book. The reason why is because when you've been in the game as long as I have, guys, and again, I'm not bragging, but I don't need to keep reading the same thing over and over again about the Fed, right? Like if you read The Creature from Jekyll Island, I don't need to keep reading the same stuff over and over again. I've read Peter Schiff's books, Crash Proof. I've read Bull Moves in a Bear Market. I've read Ron Paul's In the Fed. I've read The Creature from Jekyll Island 2 times now. Mike Maloney's Guide to Investing in Gold and Silver, Cash Flow Quadrant. So like, I don't need a person to keep telling me own gold and silver, right? Like my mentor was big in owning gold and silver. So I've been buying gold and silver for past decade, right? So I don't need you to talk to me about Bretton Woods and, what happened after World War and the gold window and like, I know that story now, right? If you watch Money Changers, I think that's like 6 hours. I'll pull that up for you guys too as well. Like once you watch that stuff, I don't need to keep reading the same stuff now. I'm action based. Like if you've been following me now, you would see like if I say I'm gonna do something, I do it. Like once I set my mind to something, I'm not going to sit up here and keep watching, documentaries. Like I don't need to watch Hidden Colors 1, 2, 3, 4, 5. Like once I get the hint of what's going on, okay, now what are we going to do about it? Right? Like I'm not a person who's going to sit around all day long and, keep talking about the problem. Let me pull this up for you guys. Give me 1 second. I'll find the documentary for you because I always tell you guys about these documentaries. And I saw a lot of this stuff I watched years ago. I know some of you, you're new, you're just coming into this. So I want to be able to give you some of the basic things that I watched a while ago. Like this, look at this. This is from back in 2009. Like this is how far back I go. Money as debt. This was back in, I remember in 2009 this came out. So we can copy this. You can go here and watch this. Paste. That's money as debt. What else we have? We have the Money Changes, I believe it's called. Forgot the guy's name. What's it called? Let me find this for you. This is a really good one. Let's see if I can find it. I really believe that this is a good documentary that you guys should really watch. I'm just trying to find it for you. I can't think of it off the top of my head. It's like 6 hours long, but it's really, really good. Once I find it for a second, I can't. I'll probably have to put it in the community tab because I can't seem to find it. I forgot what it's called though. It's really, really, really good. But like I said, I've been researching this stuff for decades. I've seen this stuff happen for years. So when I'm speaking to you guys, I'm really speaking from things that I've really researched, and I don't really like need to keep reading like book after book, basically saying the same stuff. Because Mike Maloney talks a lot about a lot of this stuff as well. He's been the Guide to Investing in Gold and Silver. I read that book probably like 9 years ago as well. So I'm well versed in a lot of that stuff. Because the Federal Reserve isn't even the first central bank in the United States. We've had multiple central banks before. Where is this document? It's a really good documentary, man. And before I get off this, I have to find this documentary for you guys. It's really, really good. I have to find this for you. I have to find this for you. I can't find this, man. It's pissing me off. I can't find this. I'm going to find it for you guys, though. Let's try Federal Reserve scam and see if we can find it. It's weird. It normally always pops up. It's a 6-hour documentary, but it's really, really good. It gives you the whole American history of money, of banking, and I can't find it. It's similar to Zeitgeist. I don't know if a lot of you have ever watched Zeitgeist before, but I can't find it. That sucks. Maybe they deleted it. You know, stuff like that they don't like to keep on YouTube anyway. They probably deleted it. I can't find it. Yeah. When I find it though, I'll definitely make sure I post it next time. Let's see what else is going on in the chat. It's called the Money Changers, but it's not popping up, Chris Stewart. I believe it's called the Money Changers, but again, I put it in and I can't find it. I can't find it. It's a really, he talks about the Money Changers, but I can't find. I forgot it's not Bill Stossel. I forgot what it was called. I forgot the guy's name, and I hate when I'm looking for something and I can't find it. It's like It's like 6 hours long. I think it came on like PBS or something. Like I forgot what it was called, and I hate when I can't find something. It's a really good documentary, man. Let's see the history of the Fed. And see, that's the type of person I am. Like, I'm going to sit here now all night and like really try to find it. I can't. I don't see it, man. That sucks. It's a really, really good documentary. Oh, guys, I think I found it. Hold on, I don't want to get a copyright. I think I found it. Yep, I found it. I found it for you. I found it. Here we go. Paste. Let's put it in the chat. This is it right here. It's 2 parts to it. It says the real history of the Federal Reserve. It's really like 6 hours, but it's really, really good. I put it in the chat for you guys. Really good. Really good. It's 3 hours. It's deep. It goes into a lot of the information, but I would definitely encourage you to watch it. Money Masters. Thank you. I think that's what it's called, self-made. Money Masters. I think that's what it's called. Let's look it up and see. Money Masters. I believe that's what it's called. Yes. 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 That's what it's called. Money Masters is right here. There we go. There we go. There we go. That's what it's called. Money Masters. So these are the same things, but I posted it. It's deep. It's like it's long. It's going to take you probably like 3 hours to watch it, but I promise you, you're going to get a real deep understanding about fiat currencies, about gold, about why gold is good and why gold is bad. Because gold may constrict governments. The problem is the financial elite own most of the gold as well, right? And that's just one of the problems that you're going to have with gold. Going back to the greenbacks, a lot of good information in there. BBC, yeah, the guy was talking about that. It's on the BBC. That was a great doc. It's on there. So really, really, really good. Really, really good. Make sure you go and watch that. Take your time with it. And research the stuff too, right? Don't just follow it blindly. Make sure you go and research it. It came out 10 years ago on YouTube. Yeah. But that's how long I've been researching this stuff. So like when the reason why I went and got the documentary, my purpose of doing that was to just say like, I don't need to keep reading the same stuff over and over again. Once I know that there's a problem, and this is why I got away from Alex Jones and like David Icke and them, because like they don't really talk about solutions, in my opinion, practical solutions, right? Like if you're telling me that all of these problems and things are happening, then I need to start focusing on solutions. I don't have time to sit around all day long and just keep listening to a person talk to me about the problem. I need to start figuring out, well, how can I solve that problem? So, and I like, when I came across Peter Schiff, then I came across Austrian economics, I start understanding the business cycle, and I start understanding, debt and how there's good debt and then there's bad debt. And this is why people like Dave Ramsey, a lot of their financial advice is detrimental to investors because they discourage you from utilizing debt. But as I was telling you guys before, I can walk into a bank and with just my name, my signature, and my social security, I can create $100,000 of cash, and the interest rates are going to be very low, 5%, maybe 6%. And if I know how to properly allocate that capital, right? Not use that money for my dream. Right? No, like I know how to put that money to things that are going to make me money. I can lever that $100,000 25 to 1, 30 to 1, especially like in futures and stuff like that. Like if you know how to trade and you know how to invest, I take $100,000 and I lever that up 25 to 1, 50 to 1 at 6%. That loan's going to be paid back in 6 months. So when you understand how to use debt properly, you can lever up and really make some real good money if you know what you're doing. Now, if you don't know what you're doing, then you don't have no business taking out debt, right? Like taking out a credit card to go to Vegas for spring break or to go to Miami for spring break, that's dumb, right? But if I can take out 15, 20 grand off of a credit card and I could put it into an investment and I can 2x, 3x my money, I'm doing that all day long, and that's what I did, with cryptocurrency. Like when we were in that bubble, every week I was in pump and dump groups and I would see, okay, the Asians, they about to pump NIM or they're about to pump NEO or they're about to pump Substratum or this coin. And I would just jump from pump and dump to pump and dump. And you could put $1,000 into one of these coins and make $4,000 or $5,000 in a day, right? But that was understanding timing, understanding hype cycles, understanding bubbles. And remember, I know this stuff because of experience, right? Like I've seen the 3D printing stocks go through that bubble phase. I've seen the chip stocks go through the bubble phase. I've seen the shippers go through because I have that experience of knowing that, even the marijuana stocks, I knew they were going to crash because that's just how the game goes, right? The pump and dumps go that way, right? They pump it and then they dump it. Like you're watching like Hex right now. You're seeing Richard Hardy keeps talking about Hex. Hex is up 50x. For someone like me, if I'm coming in with $100,000, $200,000 into a crypto project, I don't really care about getting in and getting a 4, 5, 6x. What good is it to get a 5x if there's no liquidity to get out? Right? Like, if there's no real liquidity on the order book and I go to sell my 3x investment, the market makers are just going to pull all the bids and drop the price and fill me at a ridiculously low price, right? So that you have to be careful with a lot of these cryptocurrency projects that pump. They may pump, but if there's no liquidity for you to get out, then what's the point, right? Like I'm not dealing with no little $1,000 or $2,000, right? I'm dealing with a big amount of money. So if I put my money in these crypto projects, like some of these cryptos, they don't even have no volume for the day, right? Their volume may be, $10,000 for the day. There's no liquidity in that project. So just because it's up 10x or, 5x, who cares? There's no liquidity to get out. Right? So, when you see people, but that type of stuff only works on newbies. Like someone like me that's an OG that's been in this game for a long time, you can't excite me with no 50x, right? Because I know that I need the liquidity to be able to get out, because I'm not coming in with no little, $500. I'm coming in with a big amount of money. See, when you look at Bitcoin, when you look at Ethereum, there's liquidity there to get in and get out. And when I buy it, I'm not going to fill the order book and move price. I'm not a whale. You look at these cryptocurrency projects, and for some of you don't know what I mean, I'll show you what I'm talking about right now. Let's go down here. Let's go down to the next list. Like you look at these crypto projects, right? Let's go down here. You look at these crypto projects. Like, look at this project right here, BMT. It's up 448%. Right? It's up 448%. Let's look at it, right? So they're like, look, this coin's pumping. How much liquidity you think they have? Look at this. Look at the 24-hour volume. Look at the $91.29. Look at that. Look at the volume. In 24 hours, it had $91.29. And it pumped it 448 cents. It's not. So who cares if it pumped 400%? All things are not relative. They're not this. It's not. You can't compare it. Now look at Bitcoin. You're dealing with $26.8 billion. So I want you guys to understand that. So I'm not some newbie that you can get excited like, oh, look, it 10x. Yeah, it 10x with $91. Right? When you've been in the game long enough, you've seen this. I've seen this. I don't care about can I get in. I care can I get out. And that goes back to BitConnect. Whenever you put your money in an investment and there's no liquidity to get out. And that goes back to, like I said, about gold and silver. You have to have the liquidity to be able to get in, but you also have to have the liquidity to be able to get out. If there's no liquidity and you go and hit the bids, you hit the order book, soon as they see you trying to sell, everyone's going to pull a bid and the price is going to crater. And they're going to fill you, if you put a market order, and they're going to fill you at some ridiculously stupid price. Right? So when you see Bitcoin, there's liquidity there. There's $27 billion of volume. That means there's transactions happening. There's people buying and selling, right? There's activity going on. The other coins up 400%. They had $91. So you may have made 400% in a day. Who are you going to sell it to? Who are you going to sell it to? There's nobody to sell it to. Right? You need liquidity to be able to get in and get out of your investments. So let's see what else is going on in here before we ready to wrap this up. Basically, a one-man pump, 100%. What does it mean when a crypto is designed to pump? Richard Hart is an amazing mind. Richard Hart is very, very good. And see, he's mastered one of the biggest problems with a lot of people in the Bitcoin space. And this is what I've noticed. And, I'm not sitting up here trying to act like I'm some, all-knowing guru. Many of these guys don't really study the underlying technology. So they'll say, well, Bitcoin is backed by SHA-256, right? It's backed by math. It's backed by cryptography and ECDSA. But if you ask them to actually sit down and, write out the mathematical function and show it to you, a lot of these people, they don't know that. See, Richard Hart understands how to program, how to code, how to develop, how to build a project. So when he speaks to like a Stephan Livera or a Peter McCormick, Richard Hart is running circles around them because Richard knows that they don't really know cryptography and computer science. So when he's talking to them about certain things, you can tell that they try to shy away from it. So he can say certain things like, all of this stuff works and, Bitcoin's slow and you can't develop on top of it and all that stuff. And because they don't really know how to come back and respond, because they don't really understand the technology. A lot of these people just happen to get lucky and they got into crypto early and they have a big following, but they don't really know this stuff. So when Richard is saying that Hex is designed to pump, yes, it's designed to pump based upon the way it's built, the marketing, the way that certain tokens are going to be locked up, because Richard understands, and again, this is my opinion. I don't know this to be a fact. I have to say this because I don't want to be sued. Richard understands that the dumb money is going to come when you start talking about a 50x, when you start talking about a 10x, then you get them to stake their coins, lock their coins up, and pump things. He understands that. Like, he just understands the way the internet works with marketing, with hype. So you can go and flood, you put 10 million of your own money in, right? And you spread it out over a 3-4 month period. You pump the token 2x, 3x, 4x, 5x. You say, hey, look, if you listen to me, you would have made 5 times on your money. And then you go buy it, you get locked in there, and then they dump it on you. Right? like that's how it works. Right? Like a Ponzi scheme, and I'm not saying Hex is a Ponzi scheme, I have to use my words properly. Someone has to make money in a Ponzi scheme in order to sucker new people in. It's the same thing with network marketing, right? Someone has to make money in order to get other dumb people to put their money into it, right? The way a pump and dump works, you have to pump it first, right? So you have to pump it to get the dumb money to go, oh my God, if I listen to Richard, because Richard is, like I said, Richard is very brilliant and Richard knows his stuff when it comes to the underlying technology. So Richard will sit there and talk to you for 3 hours, right? He'll sit there, he'll talk to you for 3 hours, and he purposely brings on people who he knows they're inferior to him when it comes to the tech. Like, Richard knows that they don't know tech. Richard's been in this space for a long time. He's an entrepreneur, so he's very bright. So he'll purposely bring on some person that he knows doesn't know what they're talking about, and he'll run circles around them. And his audience will watch that, and they'll be like, damn, Richard's killing them. And like I said before, because many of the people in the crypto space, you know, the Bitcoin maximalists, they don't really know the tech. They just, you know, buy Bitcoin, eat red meat, and hodl. They don't really know that type of stuff. So Richard runs circles around them and gets his audience in, and he, you know, you put your little $100 or $1,000 in, you pump it, and you don't realize they're dumping on you. And then you wake up one day and the coin's down 2,000%. I've seen that, guys. I've seen this happen time and time again. You have to understand, I've been in this game a long time. I knew BitConnect. When I seen BitConnect, I said, that's a Ponzi scheme. But guess what? BitConnect I think BitConnect was around for like almost 2 years. Right? Bitcoin was around for almost 2 years. I mean, not Bitcoin. BitConnect was around for like what, 2 years? 2.5 years? A Ponzi scheme lasted for 2.5 years. How were they able to get so many people to put their money into it? Because people are dumb. And if they see things pump, they're going to put their money into it. And that's just the reality. Like I said before, when you see stuff like this, where's the coin I just had with the BMT coin? Like BMT, up 448%. Look at this. The 24-hour volume is peanuts. There's no liquidity here. I remember this. What's this? What's this VT? Is that Vert coin? I remember everyone was talking about that Vert coin before. Wow. Yeah, look, Vert coin. I remember everyone was hyping this up before. This was the flavor of the flavor of the week. Look at it. $16 million market cap. So you have to make sure you're doing your due diligence and you're educating yourself as to what you're buying and what you're getting yourself into. Take a few more questions. There's 186 of you watching, guys. Hit that like button. Buying and selling 101. Thanks, Eli. No problem, Shad Thomas. Yeah, you talking about fake Toshi, Craig Wright, Jam Pak. You know, he's Fake Toshi, Craig Wright, he's another one who understands that a lot of people miss the wave and they're looking for the next Bitcoin because they're looking to try to make fiat dollars, right? So they're always looking for that next coin that's going to 10x, that next coin that's going to 20x. So when he goes and says that he created Bitcoin, if he really created Bitcoin, he should be able to produce the signatures from the Genesis block, from the original coins that he owns, right? He can't do that. So we know that he doesn't own the coins. We also can tell from the way that he writes, if you go to the Bitcoin Talk forum, if the guy who is Satoshi, who is speaking, the writing styles are not even the same. Then you look at the personality. Craig Wright is an arrogant asshole. And you can see someone like Satoshi, he was so passionate when you can look at the original mailing list. There's no way that Craig Wright is Satoshi, right? And he's not able to prove anything, and he's being sued right now. So he's being exposed as a fraud, and it's beautiful to see. No, I don't buy that Satoshi created Monero. Because remember, Monero is a fork from Bitcoin, and then Monero, and then you got Monero. See, a lot of people don't know that. Like it's the same code base. Like you had Bitcoin, then you had Monero, then you had Monero. So when you look at Grin, when you look at Monero, and you look at Bitcoin, Grin and like Monero, Zcash, Dash, all of these privacy coins, they exist because Bitcoin, a lot of those features wasn't put into Bitcoin that Satoshi wanted to put into Bitcoin. So as long as Bitcoin doesn't have those features, those coins are going to have a point. They're going to have a purpose, right? Like Monero is what Bitcoin should be, right? Like Monero is exactly what Bitcoin should be, like 100% what Bitcoin should be. Monero has with the ring signatures and the way that the masking scheme, how they can mask your transactions. It's truly private. Like it's extremely, you can't track people on Monero. You just can't. It's infeasible. You can track someone on Bitcoin, on the Bitcoin blockchain. Now, with Taproot, with Schnorr signatures and the different things that they're putting into Bitcoin, over time, Bitcoin's going to maybe have those features. But as far as Satoshi creating Monero, no. Monero was just basically a fork from Bitcoin, Monero, and then Monero. So no. But again, though Monero is what Bitcoin should be. Big King. Monero is what Bitcoin should be. And Monero's too good. That's why people don't buy it. Monero is really a privacy coin. It's probably the best privacy coin there is. Digibyte is good as well. Digibyte's not a bad project. The problem is that you have to think about the network effect, right? Like, for example, it's all about timing. There may be projects that may be faster than Bitcoin, may have better tech than Bitcoin, but Bitcoin has the network effect. It has the branding, and it has all of the development and the infrastructure and the money into it. So it's like, the crypto industry is going to go the way of Bitcoin, right? That's just a reality. Any coin that's trying to compete with Bitcoin, they're going to lose, because Bitcoin has the network effect. They're always going to be second. But Digibyte's not a bad project. It's not a scam, right? It's not a pump and dump. But again, like I said, at this point, you don't need multiple Bitcoins. Like I said, a lot of these projects, they're just going to die. Like I remember Nano, they was hyping Nano, like, oh, Nano can do thousands of transactions a second, blah, 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 blah. Then the project died. When you've been around as long as I have, guys, you've seen this happen time and time again. Everything gets promoted as the next Ethereum, the next Bitcoin, and then blop, it fails. So, but I'm gonna leave it here, guys. We're coming up on 2 hours. I'm going to leave it here. Thank you guys for tuning in. Please like the video, share the video, subscribe, hit the notification bell. Make sure that you join the mailing list. Follow me on Instagram. I'm going to go and finish scripting out this course. And if you want to support the content financially, a link to my PayPal is in the description. Thank you to everyone who's donated. And I will see you guys tomorrow. And yeah, that's about it. Have a good evening.